Good Thursday morning, Market Chameleons, and everyone joining us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show with this man, Dimitri Pargamonic. How you doing, D?
Good morning, Will. How are you?
Great. You want to start with the disclaimer?
Yep. Good morning, everyone. Before we get started, keep in mind, Will and I, Market Chameleon, we're not a registered investment advisor. We're not a broker-dealer. We're not telling you what to do. We're just sharing ideas. If you need professional advice, call your registered investment advisor, call your broker. That's what they're there for, to give you advice, provide you with guidance. There's the disclaimer.
Alrighty.
And let me share my screen. Okay. If you guys are joining us for the first time, just to let you know what we do the show for is to answer questions you may have about Market Chameleon tools, data analytics, or if you want to discuss strategies or something unusual you've seen, you're welcome to come on the show and ask the questions. That will benefit the rest of the community. A couple ways to ask your question is to put the question on the live chat on YouTube. Will's watching it, he'll read them back to me. If you want to come on the show and ask your question live and direct, we also provide a link to Zoom. When you click on that link, it takes you over to Zoom. Once you're in Zoom, there's a button, raise your hand. Click on that. You don't have to turn on your video camera. Once we let you in, everybody could hear you. You could ask your question live and direct. While we're waiting for questions to come in, we'll start looking at the pre-market report, get some insights, what's going on in the pre-market hours. If we don't get any questions coming in, I'm going to navigate to Meta. They just reported earnings. We'll take a look at Meta from a earnings standpoint, take a look at the options, what the straddle was indicating yesterday, what the stock did today, and take a look at historical moves in earnings to see, what we could gauge from that. So
Perfect.
Let's start out with the pre-market report. These are the pre-market report. These are showing stocks that are trading in pre-market hours. We have a list of our most active stocks, biggest percentage gainers, biggest percentage decliners. Down here, I see 164 stocks made our percentage gainers list, 59 on the percentage decliners list. So from this perspective, we're looking like we're setting up for a more bullish bias at the open. Of course, yesterday we had the Fed meeting. They raised interest rates 0.25%. Looks like some of the statements Powell was saying, the Wall Street or markets took it as very positive. We've seen the beginning of disinflation, that they think that inflation is coming down, and now the bet is that we're almost done with the tightening. Some people now think or even the markets think that that the Fed's going to start lowering interest rates. As you could see from this list, that there are a lot of small cap stocks in here. You're going to see ETFs in there, leverage products, preferred stocks, anything that's listed on the major U.S. exchanges. If it's trading pre-market, meets our conditions, you'll make this list. So let's narrow it down to a group of stocks to get a little bit better focus. And what I'm going to do is narrow it down to S&P 500 companies. And let's take a look at what's going on there. And to do that, I'm going to use the filter up here, which controls the stocks in this report. This filter in ETF, when you click on it, you get a list of ETFs to select from. The SPY, that's the S&P 500 ETF. So let's select that. When you do that, the list below gets filtered by stocks that are holdings in SPY, which are the S&P 500 constituents. And here we see that 24 stocks made our percentage gainers list, 11 on the decliners. So again, from that perspective, right now, we look like we're setting up for bullish bias at the open. The number one stock on this list right now, Meta, up almost 20%. And that did report earnings. So there are no questions. What I'll do is maybe navigate to Meta.
Perfect.
Okay. go over to Meta here. And I'm gonna first come up here. So we see here that Meta right now up 20% in the pre-market hours. And this here over here, it's shown us a press release for Meta after they released earnings. And I do want to just kind of go to it, make a quick observation here. And then I'm going to come back to the analytics. And one of the things, sometimes you look out for are certain businesses and keywords get people very excited, right? And actually, when they hear that, you'll even see the stock, jump a lot when people. So I'll give you an example. If you go back in history, at one point it was, semiconductors. Then you had COVID stocks. Then you had, blockchain stocks. And I think right now there's a lot of enthusiasm around AI, right? So artificial intelligence, especially chat GPT. I'm going to give you we're going to go over to Microsoft, which is a big investor in chat GPT. And you'll see how they performed. They were down early in the morning after earnings, but if you're hearing the news how they're investing in it, they're going to embed it in Bing, and that gave it. By the end of the day, you saw Microsoft, even though it was down heavily in the morning, started coming back up. And one of the things here I noticed is here's the first statement for this is Mark Zuckerberg. This is the press release, and right there on top, you've got the statement, then you got all the details below. And just right here, look, the progress we're making on our AI discovery engine. I think like when we hear more of this right now, we're going to see pops in stocks that start mentioning this. It could be, we'll see if Google mentions it or Amazon, but I think we're going to probably see pops in stocks that are engaged in AI. And it's just kind of like what do you think, Will?
Yeah, I think you're absolutely right. AI is the hot topic right now. It's hard to believe we're even just because I don't believe interest rates are going to go down anytime soon myself.
No.
I know, like, looking at Meta, right? It's over $100 off its low.
Yeah.
There's money is flowing back into
the market.
Yeah.
Yeah, it's flowing back into the market, and I think that right now, at one point we're sitting here, it was EV, right? Anytime somebody EV, electric vehicle, you saw big pops in that stock enthusiasm. I think now the focus has changed, and it's starting to change to that AI, especially with, people starting to use, I think AI probably kind of existed within firms, internally, but people are starting to, with chat GPT, the end user consumer is getting a little bit of an exposure to potentials of AI. Right?
Yeah, and it's been out there for a long time, right? It's just this chat GPT has put it on the top of everyone's tongues. Like Chuck was just talking about a put he sold the other day in PLTR, which is Palantir. That's their whole business is AI. They've been at it for years, right? This stock has also bounced off its lows. Meta's been into it. They're all Google.
Right, Google. That technology, right? That technology building it exists in lots of firms, maybe, and it could be firm specific, right? So there are probably AI engines there, self-correcting, self-learning, self-optimizing based on the goals that firm set. So that technology has, I think, been in existence internally in a lot of these firms. And when we hear about, the more I think that we hear about AI, and we're probably going to, I believe we're going to start hearing it mentioned more on calls. I think that's going to give a boost to a lot of these companies. You know, that there is a lot of enthusiasm there, especially with a ChatGPT. I think that they gained like 1 million users in a very short period of time.
Yeah, I think it was the fastest ever.
The fastest ever, right? So the fastest ever, 1 million users. So that's just one observation. Of course, I don't want to go through the entire Meta earnings report, but I think that just wanted to show you guys that was right up there in the first statement, right? That highlighted. This is
well, it's also, it is, I laughed a little bit under my breath, but like, at one time the metaverse was a hot topic, right?
It wasn't in the top right.
It didn't last long. No. But the
metaverse is, I think that at one time Meta was going to create a digital coin as well, to do for e-commerce, but that went away. I think that had to do more with regulation actually, but that was a hot topic. But right now, AI, I think we're going to start hearing more of it mentioned. We heard it from Microsoft, now from Meta. We'll see what the other companies do, but some of this, I think is coming from, the excitement in the AI technology. And Microsoft, by the way, I mean, it's not a very overvalued company, in itself, but I think that had to do, that got people excited. Let's take a look at Microsoft though, from the perspective of earnings moves. And here we get we could see a history here of what the options were predicting the stock will move up or down after reporting earnings. So when we talk about options, a lot of people use options not for direction, but for the volatility or the magnitude of the move in either direction. So this is looking at what the straddle was pricing versus what the stock actually did after earnings. And you could see here that let me see, the markets overestimated the move 38% of the time, meaning that 62% of the time, which is a big number, the markets underpriced the options. Okay, that the options were pricing in a much lower actual move, realized move. And what happened was that if you're selling those options, if you're a seller, you did not do well, right? And we could see here that was the case also yesterday. Yesterday, markets were pricing in a move of plus or minus 9%. And you could see how explosive the move was in Meta, up 20%. So if you sold that straddle, if you were a seller of that straddle, unfortunately for you, you got to buy back at a higher price. That would be a loss, right? So here, here we see what was the difference. So if we took the average of what the markets were predicting the day before, so the average was 7.5%. If we looked at the realized move, the day after, 10.6%. So that's a really big 3% differential between the markets and the actuals. So you could see that they were underpricing that move. And here it shows up in, the straddle, the straddle over all these periods. That was a 30% return. Long strangle, that was a 60% return. Okay. Really quickly, what if, irrelevant what happened to this straddle, what tends to happen the next day, right? So we're going to open up, where do we expect the implied volatility to open up? Where do we think it's going to be by the end of the day? Where do we think the implied volatility might go, by the end of the week? So let's get some insights there. And this is looking at an option with a 30-day constant maturity, right? So we're looking at implied volatility with an option that has a month to go. And here we're getting some stats here that on average, the day after earnings, we see the implied volatility down almost 20% from the previous day. Remember, that's a 30-day constant maturity, not the front month, not 2 days, not 3 days, 30 days out. Okay. So here's the average before and after, from 48 to 37.6. Okay, we're right now at 53.4. 5 days later, we benchmark it from the day after reporting earnings, right? End of day, and then we looked 5 days forward from there. On average, it kept declining to 35.1. So about another, two vol clicks, 2.5 vol clicks. All right, so that's just letting us know. And here's the data below. It's just letting us know, how the implied volatility tended to move post earnings. Okay. There are no questions here. Let me move to the distribution of returns around earnings. So here's Meta, and these here are looking at actual returns for Meta around earnings. And here we see, how did the stock perform heading into earnings? What did it do the day of earnings and coming out after? And, if I'm looking over here, did tend to move higher heading into earnings. So 82% of the historical observations show that starting 2 weeks prior to earnings, the stock started to increase. That could be just whatever, traders starting to put on positions ahead of earnings. Maybe that's when they start to do it. Day of earnings, we could see over here that, well, Meta hasn't, not including today, has not been doing well. Half it was unchanged, but the other half, it was up, half down. On average, down 1.7%, because we had some big moves here. After the opening, what kind of volatility do we see intraday? So today, we're gonna gap, right? We're gonna probably gap up. That's the indication right here. Let's say we open up here. Then what happens? How much volatility do we usually see after the opening, right? And to the upside, to the downside, to the end of the day. Okay. So from the opening, first we'll look at the percentage moves from the opening to the high of the day. And these are historical. From the opening to the high of the day, we took the average of those, get about 1.6%. If we look at the magnitude of the moves from the open to the low of the day, okay, that's over here. So these are from the open to the low of the day. That's on average down 3.5%. So at least historically, it looks like that the moves from the opening tended to be more volatile to the downside than to the upside. Okay, that's what this is shown. Even on here, like big up days, like 16%. All right, here's an up day. Here's an up day. So you could see that the moves to the downside tended to be bigger than the moves to the upside. Okay. What about to the close? To the close of the day tended to be weak. 82% of the time from the open to the close, it tended to close lower. Now, these are just, keep in mind, these are historical returns just to give us a sense of the distribution of returns. Every earnings is different. What they say today can be impacted one way or the other. So you got to pay attention to that. I don't know what else, they may be saying today. So you want to keep it, you still want to keep attention to what's going on, because this is a news-driven event, right? So when it's a news-driven event, the news today is not exactly as the news this day, this day, or this day. But this is how it tended to move intraday as far as, magnitude of moves up and down. And here, then we see what it tended to do after earnings, right? So weakened a little bit right after, and then started gaining strength as we go up further out in time. So that's with post. So we just looked at post earnings, option straddle, implied volatility. May stop there. Well, just not to jump to a new topic right away.
All right, D, that was awesome. It is amazing, the moves in some of these stocks. We did have it was a question about managing losses or wins on a trade. It was a big topic of conversation. I know it's a lot to throw at with 6 some odd minutes left, but they wondered how you look at managing a trade. And I know you've mentioned before, each trade's different and you look at every trade individually. Rob, I think it was a long chat, so I could copy it and show it to you, and maybe you have some insight tomorrow, or maybe you can just mention how you manage a trade on both a loss and a win, if there's a special way you do it.
We could talk about it. I think that the way that question is framed, though, is odd, because you can't manage a loss. Okay, you could manage your risk. Okay, but there's no such thing as managing a loss. And because what it's insinuating is, well, now that I lost, how do I manage my way into what? To making it a win? There's no way you can manage risk. Okay, so think of it as you're managing risk. So you have risk that is, you make an assessment pre-trade, right? So before you even put on the trade, you have to know your risk, make an assessment, and take the appropriate, make sure that you're taking appropriate rational decisions. And then once you are in a trade, your risk changes, because when you're in a trade and then things move, your risks are changing. So are you managing your risk as your risk profile is changing? You might be doing more trades, or, for example, if you buy a call and the call goes up in value, right? Well, now that it appreciated, your risk changed, because now that call could represent a bigger portion of your portfolio with more risk, right? So you got to look at it as the risk management, but there's no such thing as managing a loss. Like, I've never heard of it. That was never taught to me in college, put it this way, or on Wall Street. Nobody ever told me, here's how you manage a loss. You can manage risk. Does that make sense? Right?
Yeah.
Right. So I think some people almost believe that they could take on an outsized risk, and it's okay, because if they lose, there's a way to manage out of that. But there isn't, right? You can't manage your way out of it, like acting, like a fool and then say, "Ooh, I lost. Now I'm going to manage my way out." There's no way to do that. So think of it as there's risk management, but there's really no such thing as how do you lose money and manage your way out of that. There's I don't know of anything like that. If somebody's teaching that out there, that's great. If they know how to lose money and then manage their way into making it a profit, I don't know how to, that.
Well, you
that
can
was
take
never
a loss. You can take a loss, right? You can get out of the position, and then one thing about the options is certain strategies, your max loss, right? So when you're looking at your overall, capital, when you put the position on, what your risk is, right? And again, it's risk.
Well, yeah, for sure. But that's right, managing risk, right? And you could take off a position that you're losing on because you don't think that it's no longer, it's no longer viable, or you don't need to hold on that risk. You lost, you're moving on. Yes, so you could do that way, but that's still managing risk, right? It's not managing a loss. It's just managing your risk after something happens.
Yeah,
right.
Rob just chimed in. The upside is more difficult for me, and I feel the risk is easier to assess. I had a floor trader tell me once, cut the loss and let the winners run. How far do you let them run is his question coming off that. So again, it's all
right.
conditions,
it's all right. It's managing that risk. Exactly. I don't think that, because there's too many factors involved to give an answer, right? Like a blanket answer like that, because and that's what I mean by managing risk, is that at any moment in time, you have to start looking at all the factors and all the variables that surround it to manage it, right? And those are changing. They're dynamic. So like, for example, people manage their deltas as the market moves. They got gamma, their deltas change, and they're going to rehedge their deltas, right? Some people might let their deltas run for longer than others. Like I've seen people hedge their deltas. They get down to zero every time they get a 500 delta. Other people wait till the end of the day, no matter what their delta is. Some people will let their deltas run, for long. So everybody's kind of different, and they take in all these different variables into account. But I guess what I was trying to say is that, managing risk to me, sounds different than some other people imply. Like, when you say, how do you manage when you lose in a position? Well, what is your risk, right? That the loss in the position is relevant to, like, what is your current risk, right? And do you want to hold on to that risk? So it's a little bit different. I look at risk as, what is the position and what do you stand to make or lose from this moment? So
well, that was insightful.
Right.
Thanks, Steve. Good stuff.
All right. Well, thanks everyone for joining. Stay safe out there. Have a great trading day, and hope to see you guys tomorrow. Right.
All right. Trade and Peace community.